Lance Sasser, Capital Pacific. Welcome to Net Lease TV. It's Wednesday, October 21st. I'm glad to have you here on Net Lease TV, your first premiere here. And Lance and I have some things in common. We both are involved in Walgreens transactions. Marabella Commercial Finance has arranged over 100 Walgreens, Lance, if you can believe that. So we've had a lot of experience with Walgreens. I was a professional witness for Walgreens on a couple tax appeal cases. That was really interesting. They had sent me to Des Moines, Iowa. I had a case in New Jersey. So not only have I arranged financing for landlords, but I was also a professional witness on tax appeal cases for Walgreens. So Lance, you're located in Portland, right? Portland, Oregon? And
yeah.
you just had a daughter, is that correct?
I did. I had a daughter the day before the COVID lockdown, so it's easy to know how long we've been in the situation for. I just have to remember my daughter's age. Yeah, it's been interesting just with everything closed and luckily we had good weather for most of this time, but now that the winter is approaching here in Oregon, it'll be a little bit of a challenge to say the least.
What did you name your daughter?
We have two daughters. The oldest is Kennedy and the youngest is Reagan. So we're equal opportunity employers there.
Kennedy and Reagan, presidents.
Exactly.
Cool names. I was going to tell you, we did a deal with Zeb Ripple. A lot of you probably watching this know Zeb. I did a Walgreens deal in Houston, I think it was, the year after September 11th. And when I closed that with Zeb, I was in Switzerland. And my wife and my daughter was 2 years old. We flew to Munich. We went Munich, Lugano, Innsbruck. Innsbruck was really amazing. Interlaken, which was really cool, year-round skiing. I'll have to try to put some pictures of Interlaken or video in here. Just beautiful. And then I think we were in Montreux, Switzerland, where Shania Twain had a beautiful house. But I'll never forget that. And I was doing the deal with Zeb Ripple, and they called me from Switzerland, and they said, there's some signage out there, common signage, but there's no common signage agreement. So I said, well, I'm kind of here in Switzerland. We'll have to figure it out, but we got the deal closed. I was a little nervous being that far away from home, all the way in Switzerland and Germany, and we went to Milano. But everywhere we went with my daughter, you should try this, we did trains. So we just had her stroller, and we would just stroll her around and then jump on the train and go to the next hotel. And my baby Rosemary, who's now 19, going to Chapman University, at that time she was crying a lot, so we didn't sleep much, and it was good to be able to walk around with her anyway. But anyway, have you gone through the call key crying stage yet? Where are you at in the process?
Yeah, that's a good question. We are out of that. That did happen. We didn't have that with the first one. Yeah, there's been some tough nights, and now the problem is they just get up at 4:30 in the morning, both of them now. 4:30, they're just up and at them, and they're up. They just want to party, which I'm fine. I go to bed early now, so I'm trying to get on their schedule, but it's tough, and I'm looking forward to them sleeping in for once. We'll see if that happens.
I remember when we were having my daughter, I was closing a kinder care. This was 2000, because my daughter's a millennial baby, Rosemary. And I'm out, they're saying, hey, we're ready to close. And I'm like, well, I got to run in. My wife's having my baby right now. And I was literally closing a deal right when my wife was having a baby. You mentioned Montana. My nephew just did his second location, Jersey Mike's. Vic Marabella just did his second location with Jersey Mike's. And they actually had the CEO, Macro, I believe is his name, fly out and work with my nephew, Victor Marabella, at his location, which was pretty amazing.
Which town?
What's that?
Which town?
I think he's in Bozeman.
Bozeman's the best.
Bozeman.
Yeah.
And then he just did his second location, and the CEO of Jersey Mike's flew in and was actually there with my nephew working, which was really a testament to Jersey Mike's. You know, they do a great job, and the CEO is actually involved with the operation. That's why they're so good. Their quality is awesome.
I'm a big fan of Jersey Mike's. I like that.
So now we have a kind of a common associate, my attorney, a vet, and I think you're working with a vet, and you're selling some of her Walgreens. Is that correct?
Yeah, I've represented her on both sides, buyer and seller, on a couple of deals now. We're, knock on wood, closing another deal on Friday. So she's been great. And to be honest, she's taught me a lot, just her experience working for Walgreens corporate, years ago. And that's what's kind of opened my eyes to what I think, potentially we've been misled on a couple of different points on why you look at one Walgreens versus another. And I've learned a lot. She's a rock star.
Yeah, Yvette's awesome. I trust her. I go to her, for advice, as well as Chad, her associate Chad. And also James Lekowitz, who used to work over there, is a good guy. He represented quite a few of my buyers on, net lease deals, reviewing the loan docs, helping us with the SNDA, the estoppel, the whole drill. Now, have you closed a couple with a vet? Have you already closed those?
We've closed 3 so far, and the 4th one again coming up soon.
Did they have debt, or were they all cash, or?
At this point, they've been all cash.
So definitely have those buyers come back to us to pull cash out. We'd love to pull cash out and have them buy more net lease.
I'm on board with that.
Celebrate your independence. Call Marabella Commercial Finance for all your net lease financing needs. We have 5, 7, 10-year fixed rate, 15-year fixed, in the high 3s, low 4s. You can call us anytime. That way you're independent. If you want to call us, call us. 760-479-0800. Thanks again. Buy more net lease.
I'm on board with that.
We just did a cash out on another Walgreens, and on that one, Lance, it was the guy wanted to pull cash out, and I did a 15-year am. He wanted short amortization. He just wanted to pay down the loan very quickly. With the lowest rate we could do, we did a 5-year fixed, 3%. Right now, we're meeting with a 1031 buyer. She's got about $2.5 million. I'm going to meet her at our office in Beverly Hills on Friday. And what we're going to do with her is get her all the, her side of the deal, get all her financials, her tax returns, NED documents, resume, put it all in a Google Drive so that once her agent plugs her into a deal, we can hit the ground running with the financing. And, I told her, let's spend a lot of time together. We'll spend time at our office with these buyers because we know exactly what the lenders are going to need. And so it's a big advantage for you guys as agents. That way, 3 quarters down the way, the lender's not asking for a bunch of things on the deal. And the
get it teed up.
Going, hey, what's going on with the loan? Because the main thing for you guys is you want to make sure that this is expedited so that you look like you said, like a rock star to the sellers. So tell me a little bit. So what's happening with Walgreens demand as far as COVID? Now I heard that Walgreens and CVS are going to be the main benefactors of COVID with the vaccines. Is that correct?
That's what we've heard. They'll be kind of the primary place to go. And that makes sense, right? I mean, the only other national player would be Rite Aid. So I think that actually makes the most sense to reach the most amount of people, easily. I get that. Seems like a logical choice for them.
In terms of demand, though, if a buyer called me, for financing and, from a purchase standpoint, I know this stuff. What should a buyer be focusing on when they're evaluating a Walgreens deal?
And that's the question, right? And that's where I think my opinion has changed after working with Yvette and understanding kind of we're never going to know what's happening behind the iron curtain with Walgreens. You'll know their front end sales, but obviously pharmacy is where you just don't quite know, right? You have to make an assumption. And what I think is interesting is when you hear someone say that front end sales to pharmacy is probably somewhere in the 65-35 or 60-40 range.
Right.
That's old school. And 2012, it was about that. Now we're talking about 75-25.
Oh, so really?
Yeah, and that's out of their 2019.
So explain that to people that don't understand. So 75 is not explained, and 25% is explained in the percentage rent schedule. Is that what you're saying?
Yeah, so usually on most of these Walgreens leases, they report sales, and all they report are their front-end retail sales. And that's just per the contracts, per the leases. And so when you're seeing that, when someone says to you, yeah, that's probably 40% of their revenue at that location, that's just not accurate anymore. It used to be pretty close to that 10 years ago where you could, it's close enough to 50-50, 60-40 is where you could make a general assumption. But now when you're talking about 75-25, front-end sales are just less relevant in terms of the profitability of a single location. And remember, 75-25 is a blended average throughout the country. That doesn't mean that location is anywhere close to that exact number.
Right. There's some varying store sales on each store has varying. But if you had a store that reported 2 million, so you're saying take the 2 million and divide that by 25%, and that'll extrapolate the total sales, or you can take it
on an average basis, right? Yes.
So what would that be? Let's just figure that real quick. So 2 million divided by 25%.
Could be 9 million or so, if I'm doing my math right.
Yeah, 8 million. 8 million.
Yeah. And and that's where what I've seen though is I've seen Walgreens with good reported front end sales, and I've seen Walgreens with, not front end sales that we'd like to see, right? And I've seen one location with the lower front end sales actually likely is more profitable for Walgreens, given that they've just cast a brand new 15-year lease with bumps. They're not doing that to every store. They're only targeting their highest profitable stores. So when you look at a store with under 2 million in front end sales and they're doing that, what that tells you, in my opinion, and it's not making a big jump here, is saying that that's probably not 75-25. That store is probably 85% pharmacy if their front end's that low, but yet it's a top performer. If that makes sense. I mean, I've seen them deny that lease on a store with 3 million front end, and I've seen them do it on a store with 1.6, and the rent was the same. Think about that. The rent's the same. So the only thing you could take away from that is, wow, one of those stores has huge pharmacy and the other doesn't.
When you say now, why would that be? Because they're not reporting the pharmaceutical goods that they're selling. Is that correct?
Yeah, exactly. They're not reporting it, and so you can make your general assumption. But when I see them deny that 15-year lease on a store with good front end sales, the only reason they would do that is because the net operating income at that store is not actually that good, and the only reason that would be is pharmacy, because it's what we can't see.
So the pharmacy portion is what we can't see. We can see the front end, like candy bars and shaving cream and razor blades, but we can't see the pharmaceutical goods. And so what you're saying is, even though that one store with the higher reported sales, they went with the one with the lower reported sales, so you deducted from that one lower sales that were reported probably had some pretty outstanding pharmaceutical sales. Is that correct?
Exactly. I mean, if the rent is equal, right, so you take that off the table, there's not really any other variable that comes into play that you could make an assumption based on. in an urban millennial-driven area,
Sure.
I would imagine the pharmacy needs in that area are far lower than a more rural area with an older demographic. You know, if you look at just the pharmacy stats, and I actually pulled them because I didn't know the numbers and didn't want to speak out of turn. According to, the government, 89% of adults over the age of 65 have at least one prescription. So when you're talking about buying a Walgreens in an area with an older, aging population, they're probably doing better pharmacy sales in urban San Francisco or Seattle, where the front end's probably pretty good because of the daytime population, but the pharmacy needs probably aren't the same.
I don't know if you saw our panel with Jesse Lyman, Carly Iacono, Ted Dowding, and a couple other agents that we did, but this was a big subject, and I'll try to put a snippet of that in here. And we all kind of agreed that Walgreens and CVS have become much more important since COVID hit. That, when Amazon kind of got slow with their shipping, they couldn't get any inventory and nobody was getting things from them right when COVID hit. And so people felt very insecure about going through an online pharmaceutical provider, and they want street retail for their pharmaceutical goods. So we all kind of agreed that for a while there, people were slacking off on Walgreens and CVS, but now everybody's kind of back on board with pharmacies. When I got into Net Lease with, Keith, I know Keith was in there about the same time when I got in, 95, and Alan was, pharmacies, there was no Amazon. I think the biggest thing that has really affected the pharmacies is this whole idea that the pharmacies could get disrupted by Amazon. Do you think that people are thinking twice now, kind of like they're thinking, hey, we should have some manufacturing here in America? Why is all our manufacturing of our stuff happening in China? We should have had, as far as masks, all the medical things. Do you think that there could be also an issue if we're buying all our stuff online, if the computers, there's an emergency, a war, or whatever, and the computers break down and you can't get anything? That's only the argument I would say for really, pharmacies are almost an essential thing. And if you start to, will there be a different value maybe in the future for street retail? Or do you think it's still going to go the way of Amazon? Do you think Amazon will get bigger? Pharmacies will be less? I think that's the big question in most investors' minds as far as the pharmacies. Does anybody want to take that one? Jesse? Okay, Jesse, you're on.
Matt, did you have something to put in there?
No. You're good. I can hand it off.
I just said, personally seeing Amazon hit a wall recently. I've been buying a lot prior to the quarantine in terms of just day-to-day goods, and then post quarantine. And what I noticed is I started canceling more of my orders recently, more and more, because they're not capable of filling those orders in a timely manner. They're actually hoping that the consumers go to Walgreens because they can't handle. So Amazon supply chain is overflowed with things like toilet paper and disinfectant. So what you are seeing, maybe by circumstance of that event occurring currently, is people are not relying on Amazon and they are going to those local smaller stores like the Walgreens, like the Rite Aid, like the CVS, and that's a reliable way. Plus, they don't have to go into the store; they can drive through, which is preferable. So I do think that, and
that's kind of what I was
having been cold calling owners of drugstores leading up to, people were more willing to sell at that point. They're like, wow, we got to get, the perception was they want to dump. Higher perception wanted to dump than wanted to hold than I had seen in the past. The shift, as soon as folks started to see the supply chain lock up, those owners were like, I'm going to hold on. We've got to wait, because I think that values, perceived values are much higher now.
Pharmacies. That's what I'm thinking. Would you agree with that, Lance?
Yeah, and I pulled some numbers too, because I was under that same impression, but it's always nice to have the data and what it's
For
looking
sure.
like right now. So in 2018, there were 202 Walgreens sales in the nation, 344 in 19, and we are on track this year to do about 375. So we'll have more Walgreens sales this year than the last two. And that was, again, I think I wouldn't say that pharmacy fell out of favor with investors, but I would say it's taken a back seat over the last couple of years, and I believe that has changed 100%.
That's
Yeah.
kind of what we figured, but we didn't have empirical evidence showing that. But that was what we kind of all figured. Confidence level, when you're an older person, you need pharmaceutical goods. You don't want to just, rely on something that's not reliable. And so we thought, you want to go down to your store, get it, and then leave.
And I think that's even more so the case in some of these smaller markets too. I mean, I think the Amazon effect will probably be, more real and quicker in a place like Seattle or San Francisco versus the Midwest, right? It's just, when you have a tech-oriented population, I think they'll be the first group to kind of jump on that train, that tech train. But if you're selling at Walgreens in, Tulsa, Oklahoma, I just don't think they'll have that impact as quick. So I think, again, everyone wants to own urban property, just given the demand on some of these West Coast markets. And I understand that. But if you're talking about just Walgreens and CVS specifically, I'm not so sure that it makes actually more sense than buying in these other markets that the demographics may actually lead to a better store.
That's an awesome point you make. And I have an interview, and I'll put a snippet from that I did with Robert Roscoe at ICSC and Walgreens. Robert Roscoe used to be one of the head guys over there. And when I did that interview, I think it was like 14, 15, but I can't remember exactly. He said that Walgreens' big push was urban. But I would imagine now, suburban is probably just as strong with COVID.
Do you want ground up construction, or would you consider in-place buildings when you go in? A landlord does tenant improvements, or do you need to do ground up construction so that the prototype is exactly what you're looking for?
No, if anything, we're kind of getting away from the prototype.
Okay, you want to do
those are that's right. So greenfield sites are very difficult. What we like is the high density urban core sites, which is going to automatically put us into an existing building or square footage of some sort. We'd rather have an adaptive reuse of that, which is a much more beneficial project to us from a sales and profitability.
I want to make another valid point there.
And there's even another piece to that too, and it's about their expenses too. Like, if everything is equal, let's look at, because remember, Walgreens isn't basing the profitability on sales. It's based on net operating income. How much profit do they pull out of a store? So if you look at a Seattle or Portland Walgreens urban, and you compare that to, the Tulsa, Oklahomas of the world, you're probably talking about higher property taxes in Portland, Seattle, higher minimum wage costs, probably higher expenses in general. So again, if the sales are comparable between the two, I would venture to say they're likely more profitable at the store with lower expenses.
Yeah, for sure. You can sell a candy bar at the same price in New York as you probably could in Colorado, right?
Yep.
Probably the rent in Colorado is a lot less. So just what you're saying, and that's where the rent to sales is huge, right? That's where you really, but like you said, it doesn't explain everything because we don't know what the pharmaceutical is doing. We only know, like you said, the front of the store.
I think that's where you have a broker, and hopefully your broker, can pull demographic information. You can make some assumptions based on the population and the competition in the area. I think if you're buying a Walgreens specifically, again, it's unfortunate to say this, but it doesn't matter where the Walgreens is at for the 98% of the deals. Backfilling a Walgreens if they leave is a challenge to replace those rents.
Yeah.
Doesn't matter where it's at. That's a challenge. And so you shouldn't base your decision on buying a Walgreens, based on backfilling options. That won't work well for you.
Although I saw a pretty cool Walgreens store, and I was doing some market research in LA, and they converted it, and the architecture is really cool. And I could tell it was a Walgreens. It looked great for this, and I can't remember the use, but I was thinking, hey, that's a cool looking, what they did with it is really cool. It was an old Walgreens store that they converted, and I can't remember the use, but I should have taken a picture. But anyway.
Yeah, I'm curious on the use, because what we've seen out here are, Dollar Trees, Harbor Freight, kind of the typical second gen tenant that won't pay the same. I mean, Walgreens will pay $25 a foot. Dollar Tree's not going in at $25
Dollar
a foot.
Tree's not going to pay that kind of rent, no doubt, or Family Dollar or Dollar General, no doubt about it.
Yep.
How can somebody? So now you representing buyers, or do you represent sellers?
Both. That's probably 50-50.
You're doing a little bit of both. How can clients contact you, or developers that are thinking to list? How can somebody contact you, Lance?
Yeah, I mean, I'm happy to just share contact info. I mean, I'm pretty active on LinkedIn, as I know you are. So if people can DM me on there, they can email, they can call my cell direct. I'm always an open book. Again, I'm doing a Midwest Walgreens right now, but typically I'll be focused on the Northwest. So if there are people out there that want to talk, even Wyoming, these are places I've been, I've transacted, and I know these markets better than folks that just do business there but have their headquarters somewhere else, because I go there a lot. I have to.
Do you have any financing questions? Well, you got me here.
Yeah, I do actually. That's a good call. I have some clients that, and we've talked about this in the past, but it's been a while, that are hyper focused on cash on cash. They don't care about principal pay down whatsoever. So they're interest only kind of guys. That market has kind of dried up in terms of the higher LTVs, because we're not targeting 50%. We were targeting 65, 70. Has that came back?
So, we deal with different type of lenders depending on what the clients want. And I've given this metaphor. One, the lender's got to like the use, right? They got to like a pharmacy, some like QSRs, some like C-stores, and they got to be able to go to the location where the property is. So if I'm doing a Walgreens or CVS, one, I got to get a lender that likes pharmacies, and two, they'll normally do a minimum loan of like 3 to 10 million, but some of them will drop below that. They gotta be able to go where the property's located. And then three, we've got to structure a loan that meets that specific client's needs. If the client's in a 1031, normally they've got to replace the same amount of loan and price that they had on the down leg.
Yep.
So, so sometimes it kind of varies with 1031 buyers. I would say right now, if the last total IO deal I did was like 5 to 7 years, and I did that a couple of years back with a CMBS lender. Right now, CMBS, it's a little crazy.
Yep.
I think with New York, the way it is, they have a lot of exposures to hotels and to office buildings. So, they may be choking a little bit on those office buildings and hotels. But the last CMBS quote I got, I think they were like 3.5 to 4%, and figure, LTV anywhere between 50 to 70 for a non-recourse deal, and maybe 5-year IO deal. CMBS is really the way to go for non-recourse.
Yep.
Interest only above 50%. But it's an expensive loan. You're going to have, very expensive legal. Last one I did, it was $30,000. It was a 100-page loan document. There were some triggers. If the property got downgraded, if Walgreens got downgraded, they could capture the cash flow. and the prepayment penalty was very, very onerous, very expensive. Pretty much you can't prepay that kind of loan. So if your client's ever thinking of exiting the deal, it's not the best loan. Portfolio, on the other hand, I would say 50% or less loan to value with, like, maybe 5-year IO deal that would then amortize over 25 to 30 years. That's probably the other way you could go, and you get like a 3-2-1 prepay or no prepay. Pricing again, probably 3.5 to 4 3/8, somewhere in there. My best pricing is like 2.5 to 3%, kind of like the Walgreens I just closed in Florida. It was 2.5 to 3%. But the lender's gonna basically look the borrower upside down, and they're going to be more conservative on the underwriting. So, there's kind of a trade-off.
Was that 10-year money or was that 5-year money?
Say again?
Was that 5-year money or 10-year money?
That was 5-year money at 3%. I'm trying to do another deal, a tire deal at 2.5 to 3. But they're looking at the borrower very closely and the property. So the process is a little bit more stringent than we would have all liked. So there's some kind of give and take there. You maybe go with more of a nuts and bolts lender at a little bit higher rate. It's going to be easier to get the deal done than, a very low rate like 2.5 to 3. They're just going to be more conservative on the underwriting.
What's the best? So what's the best you're seeing out there for investment grade? I mean, it could be a 7-Eleven, a Starbucks, kind of, you name it, $3-5 billion deal, 10-year fixed, 30-year AM.
Fixed. I would say, let me just look. I just quoted a Dollar General. I think we're coming in on that Dollar General deal. Smaller loan though, okay? It's a smaller loan, maybe $1 million, $2 million, probably 3.5 to 4 3/8.
Okay.
That's kind of the range right now for 10-year fixed rate money with like a 25 to 30-year AM. But again, for the right deal, 50,000 population and 5-mile radius, good credit, long lease, good sponsorship. You can get down to 2.5 to 3 on a 5-year, maybe low to mid 3s on a 7 or 10 with a 25-year AM, but it's going to be lower leverage deal, 50% loan to value or less, and very stringent underwriting, and some people maybe don't want to go through that for surety of execution and non-repricing. Maybe start with a lender that's a little bit higher, but all eyes are on the deal. There's not, some of these lenders are kind of bureaucratic that are offering those, 2.5 to 3.5 range rates. So hopefully that answers your question.
No, it does. I mean, I know it's been tough. I think what you said earlier is spot on. I mean, if you're an exchange buyer and you have to replace that debt, then it all makes sense. If you're, not an exchange buyer and you're just kind of focusing on cash flow, then, 50% LTV at a, 5 cap deal, it doesn't really look that great right now, right? I mean, if you don't have to, it's a challenge. That's been our biggest challenge.
I think where your deals are going to make sense, where somebody, had a 50 or 60, 70% loan to value on the down leg, and they're doing the same thing on the up leg, because, the loan constant is probably higher than your cap rate today. And that's kind of the rule of thumb I always knew is if your loan constant is higher than your cap rate, the more money you put down, the better. If the cap rate is higher than the loan constant, the more debt you get, the more leverage you get, the higher your cash on cash will be. And I would anticipate right now your loan constant's going to be higher in most cases than your cap rate, unless you're doing the kind of the interest only that you mentioned. And then, then it comes down to when do you want your cake, now or later? Do you want kind of a lesser loan amount? Do you want to do a fully amortizing deal where you have the cake later, or do you want cash flow right now? Do you need cash flow? And then later you may have to deal with a balloon or, you know, something of that sort that is going to be a little bit harder. So that's kind of the trade-off. I want to thank you for being on Net Lease TV, and definitely subscribe. Tell Zeb and Chris Kosinaki to subscribe. We'd love to have all you guys as a patron. I think the next time through, if we could do a panel with Zeb and Chris and you, I'd love to have like a panel talking about all your different deals. And do you ever get over here to California? I'd love to meet you in person.
Yeah, let's do it. I'm on board.
Awesome. Thanks again for being on Net Lease TV, and I hope you'll sell more Walgreens, and I appreciate you as a guest. Thank you so much.
Appreciate it, Chris.
Thanks again.